Hello everyone, welcome to my channel Studiosa. Here you will find simple and clear explanation of accounting concepts from advanced topics. My goal is to help students, professionals and anyone interested in understanding accounting in an easy and practical way. I'll be sharing short focused videos covering concepts, examples and problem solving tips that make learning accounting effortless. Don't forget to subscribe and turn on the notification so you will never miss a new video. Thank you for joining with me. Let's make learning accounting simple and enjoyable together. Let's get into the definition and the meaning of accounting. Accounting is defined as the process of identifying, measuring, recording, classifying, summarizing, interpreting and communicating financial information. It is a systematic way of collection and presenting financial data to enable informed judgment and decision by users of accounting informations. In another way, accounting is the lifeblood of business or language of business. Why? It helps to understand the financial health and performance of an organization for its needy members like owners, different departments, and the creditors. Let's move to the next slide. Accounting cycle. Identify, record, measure, classify, summarize, interpret, and communicate. First one, identify. This step involves recognizing and determining which business transactions are relevant to the company's financial records. Only events that have a monetary impact on the business are identified for recording. Record. After identifying transactions, they are recorded chronologically in journal using double entry system. Each transactions include debit and credit to ensure accuracy and completeness. So, what is double entry system? Double entry system is an accounting method where every transaction affects at least two accounts, one with a debit and one with a credit, to keep the accounting equation balanced. So, the equation will be asset is equal to liability plus equity. We will see the principles and concept in detail in the upcoming videos. Next cycle is measure. The value of each transaction is quantified in a monetary terms to maintain consistency in reporting. Measurement ensures that all entries are expressed in a common financial unit, usually the currency of the business country. Fourth cycle is classify. The transaction then grouped into specific accounts within the ledger, example, asset, liabilities, revenue, expenses. This classification helps organize information for easier tracking and reporting. Summarize. All classified data are compiled into financial statements, such as balance sheet, income statement. Summarizing provides an overview of the company's financial position and performance. Interpret. The summarized financial information is analyzed to assess profitability, liquidity, and overall financial health. This step supports management and stakeholders in making informed decisions. Last cycle is communicate. The interpreted results are presented through financial reports to the internal and external users like managers, investors, and creditors. Effective communication ensures transparency and accountability in the financial reporting. Objectives of accounting. The primary objective of accounting is as follows. Protecting business asset. Accounting helps in protecting the assets of the business by maintaining proper records of the assets and liabilities. Providing information to various users. Accounting provides financial information to various users such as owners, investors, creditors, employees, and government agencies to enable them to make informed decisions. Facilitating management decision making. Accounting provides relevant and reliable financial information to management and stakeholders, which help them in making informed decisions regarding various aspects of the business. Understanding financial position. It helps in determining the financial position of a business at a particular point of time. This is done through the preparation of balance sheet, which shows the assets, liability, and owner contribution. Ascertain profit or loss by maintaining systematic records. Accounting ensures that all the financial transactions are recorded in a systematic and chronological order. This helps in avoiding errors and omissions. Thereby, accounting helps in determining the profit earned or loss incurred by a business during a period of time or a financial period, usually a year. This is done through the preparation of income statement, also called profit and loss account. Let's look into the core functions of accounting. The main core functions of accounting are recording. This involves recording all financial transactions in an organized manner in the books of accounts. Classify. This involves grouping similar transactions together in separate accounts, like creating ledgers and subledgers. Summarizing. This involves presenting the classified data in a useful and understandable manner, such as through the preparation of financial statements, includes income statement, balance sheet, cash flow, and statement of equity. Analyze and interpreting. This involves analyzing and interpreting the financial data to understand the financial performance and position of the business. Last one, communicating. This involves communicating the financial information to various users. We are moving to the last part of this video, advantages and disadvantages of accounting. Advantages of accounting. Provide a complete and organized records. Accounting provide a complete and systematic record of all financial transactions, which helps in avoiding errors and omissions. Next one, helps in ascertaining profit or loss. Accounting helps in determining the profit earned or loss incurred by a business during a specific period of time. Helps in ascertaining financial positions. It helps in determining the financial position of a business at a particular point of time, called a financial year. Helps in decision making. Accounting provides relevant and reliable financial information to management, which help them in making informed decisions. Helps in controlling cost. Accounting helps in controlling costs by providing information on various costs incurred by the business on a particular time. Right information help management or the financial department to identify and cut down different unnecessary costs. Helps in raising funds. Accounting provides financial information to the potential investors and creditors, which helps in raising fund for the business by analyzing the creditworthiness of the business, income statement, provide operational efficiency on a given period, and balance sheet shows net asset and liability and the owner's contribution. Helps in ascertaining tax liability. Accounting provide information on the income and expense of a business, which helps in assessing tax liabilities. Limitations of accounting. Based on historical cost. Accounting is primarily based on historical cost, which may not reflect the current market value of an asset. Affected by personal judgments. Accounting involves personal judgment and estimates prepared by the person, which can affect the accuracy and reliability of financial information. Ignores qualitative aspect. Accounting primarily focuses on quantitative aspect and ignores qualitative aspects such as employee morale and customer satisfaction. Window dressing. Financial statements can be manipulated to present a more favorable picture of the business, which is known as window dressing. Not a perfect science. Accounting is not a perfect science and is subjected to error and omission based on the data taken. Influence of inflation. Accounting data may not reflect the true financial position of the business during the period of high inflation. Thank you for watching. I hope you found this session helpful and easy to understand. Keep learning and stay connected for more short videos and practical lessons in accounting. Don't forget to like, share and subscribe to Studiosum, your space for clear and simple accounting concepts. See you in the next video.